Welcome to Business Talk with me, Michael Avery. And there was a fantastic quote that I read the other day from one of the founding fathers of the US, Thomas Jefferson. And it goes something like this: a departure from principle in one instance becomes a precedent for a second, and that second for a third, and so on until the bulk of society is reduced to mere automatons of misery, to have no sensibilities left but for sinning and suffering. And the foreshore of this frightening team is public debt. Taxation follows that, and in its train, wretchedness and oppression. And I think worth recalling at this time, as we're having conversations about increased taxes potentially to fund the vaccine rollout, revelations that we've been paying over the top to secure some of those vaccines from the Serum Institute, and the fiscal cupboards that are looking increasingly bare on the one hand, and then over in the US, you've got a new administration certainly hitting the ground running. It couldn't juxtapose the difference in governance more starkly. Well, I'm joined now by Nedbank economist Isaac Matshego to talk about all things fiscal and monetary as well. Isaac, welcome to the show.
Thank you, Michael.
They bought almost 40 billion in the last 2 months of last year. We're up another 6 or so billion year to date, and foreigners returning to the JSE. So for as long as this continues, we might ask, what are the problems? The question is, how long might this last? How are you reading this action in our markets?
Well, Michael, we must remember that the demand for our bonds, i.e., local currency bonds, is closely tied to global sentiment. And when we see, for instance, a risk event, such as, for instance, we can go back to the global financial crisis in 2008, we can come to the shock of COVID-19 in the second quarter of last year. We always see global investors reacting to that, and they will buy or sell our local assets depending on global sentiment. What we really have to address as a country are the fundamental issues. Remember that we are now rated as non-investment grade, or the so-called junk, by all three of the leading rating agencies. And that has resulted in South Africa, for instance, being excluded in key global indices. I mean, these are for bonds. And we've seen some investors reducing their exposure to our markets. And this poses a risk because we are in a very difficult fiscal situation right now. And government actually is running a very wide budget deficit. And that budget deficit has got to be financed. And the local market is not big enough to absorb, all this debt being issued by the government. So we need to ensure that we maintain at least our attractiveness to global investors, so that we can keep on attracting those inflows into our bond markets.
To fund that budget deficit, which is the difference between what government collects in taxes and then spends on social services, infrastructure, roads, all of these things, healthcare during a pandemic, and that is widening, not just because of COVID, but because of years of structural decay. On the back of that, what do you see as some of the main challenges coming up in next week's budget? We seem to say every year that this is the most critical budget in our democratic history, but this certainly has the feel this year of being the most important.
Sure, absolutely. I mean, every budget statement has become more critical than the last. I would say at least since Minister Pravin Gordhan's first term as finance minister, because, his ascension to the treasury coincided with the effects of the global financial crisis and the subsequent recession that we had in 2009. But after that, we saw a lot of missteps, if I can label them as that, in government. Poor spending, poor controls, particularly at the key state-owned enterprises, and these are in a very poor financial state. And we've seen them increasingly becoming a burden on the fiscus, needing blackouts, and this has not really helped us. What we need to do as a country is to ensure that number one, we sort out the troubles at the key state-owned enterprises. Number two, we reduce their dependence on the fiscus, and number three, we also curtail their dominance of some key sectors. I mean, we can talk about the power sector, particularly electricity, where Eskom remains the dominant player right now. It's quite encouraging that some progress has been made when it comes to licensing the independent power producers, when it comes to liberalizing, for instance, municipalities are sourcing power directly from IPPs. We need to move fast when it comes to that because we do need to reduce our dependence on Eskom when it comes to power supply.
And on that note, it was encouraging to read the recent Lekgotla statement that emphasized that we need to focus on these energy reforms and speed them up if we're going to bounce back from this COVID-19 pandemic. Because one of the big issues is when we start to see a return to some semblance of normality, how much power the system will be able to deliver to enable sustainable economic recovery. What are you expecting this year from an economic growth perspective and beyond that as we look to exit the COVID pandemic?
Well, we are quite optimistic that we will see recovery during 2021. Um, the main reason being that we'll be coming from a very low base in 2020. I mean, even last week, the Reserve Bank's numbers indicate that, in 2020, the economy contracted by at least 7%. And that is pretty much in line with our expectations. So with the gradual recovery, the gradual return to normal economic activity, we do expect a bit of a pickup. Although, the economy is unlikely to get back to pre-2019 levels within the next 2-3 years. It will be quite some time before we are able to get the economy growing beyond the 2019 levels.
So then that begs the question, how is government going to continue to fund this widening deficit? So there's talk of raising taxes. How much space is there to raise taxes in an economy that's struggling to grow? Where are you going to raise it? Individuals already paying a very high rate at the margin, companies as well. What do you expect to see on the tax front and the various balancing acts that the government has to perform come February?
Before the National Treasury, passes more tax measures, it should really show a commitment towards cutting expenditure. Because the problem that we really have in South Africa, at least in the public sector, is inefficient spending. We've seen tax increases since about 2016, and unfortunately, those have not really delivered the sort of revenue growth that was expected. And in the medium term budget policy statement in October last year, the finance minister made it quite clear that new tax measures are coming, i.e., tax increases, because he stated that, for the coming fiscal year, the Treasury is looking at raising an additional 5 billion in taxes. And for the following year, actually the following 2 years, those measures will be estimated at about 10 billion a year. That will not really help an economy which is already burdened by higher taxes. And number two, an economy that is operating at very low capacity. We've got a lot of excess capacity, and that is partly a result of the shock of COVID-19, but also due to the inefficiencies that we've seen in our economy, for instance, the unstable power supply.
Now, I think Eskom remains the elephant in the room here, any which way you slice it. What ideas do you have to help turn things around at Eskom? Obviously, new CEO Andre de Ruyter admits that they're suffering from a confluence of factors, the death spiral. As you raise the tariff, fewer people want to use your product, so they migrate off the grid. You've got old, aging coal fleets, and you've got to retire those while bringing new power stations onto the grid. That takes time. What is the solution here? Because you've still got the 480 billion rand debt, which is the elephant on the balance sheet.
Sure, Eskom has to be sorted out, and the start has to be the transfer of some of its massive debt to the treasury, because Eskom is struggling even to meet its debt service obligations from the cash it generates from its operations. After that, the production challenges have to be addressed. Some of its very old power stations have gone well beyond their lifespan. They've passed their usefulness. I mean, some of those power stations had to be mothballed about 5 years ago, some of them a decade ago, and those power stations are just too expensive to operate right now. So a program has to be found to ensure that the mothballing of those power stations is accelerated, and that will have to be coupled with, for instance, creating an environment which is going to boost the establishment of alternative power sources. The integrated energy supply program is encouraging in the sense that it is moving towards licensing the IPPs, ensuring that we diversify our power supply sources, but we do really need to sure that we are accelerating this program, because stable power supply, stable and cheap power supply will be quite important for the economic recovery.
Let's say, for sake of argument, that we do get Eskom performing at an optimum level. We bring new renewable power into the grid, so power becomes less of an issue. What do you see as the long-term structural impediments still to growth in South Africa? What are those other levers that you would be encouraging the president to employ in order to ensure that we can grow all the way through to the National Development Plan goal of 2030?
I mean, we will have to take a leaf out of the books of countries such as India, Malaysia, which, in the 80s, in the 90s, ensured that number one, they were well integrated into the global supply chain. And to achieve that, we have to improve efficiency in our economy. I mean, and that is a bigger challenge for us, because remember, we are situated at the southernmost tip of Africa. When it comes to trade with the rest of the world, particularly, the key nodes in the global economy, your Asia, your Europe, and even North America, our trade is a bit more expensive. Than when those regions are trading with each other. So we need to ensure that we offer value to the world economy. We offer value to the global supply chain, and that will take some serious measures, which will have to shift, which will definitely shift our economy from where we are right now, which is sort of a higher cost production economy relative to other emerging markets. And to achieve that, we have to ensure that we attract investment, not only capital, but also intellectual capacity to innovate in our economy, to ensure that we do play our part in the global supply chain, which, by the way, is going to be very, very important in the post-COVID economy, because technology is going to play a huge role in the global economy. And those economies which are not well integrated into the supply chain will not benefit fully from that.
For example, we've seen a success, an unsung success in South Africa of business process outsourcing, using our cost competitiveness from a currency perspective, the fact that our population largely speaks English, and can then service markets in Europe. And from a time zone perspective, it is a template, if you will, of a sector that has potential to mop up a large swathe of the unemployed in South Africa. But unemployment remains one of those big issues. We seem stuck here between ideologies, Isaac. On the one hand, government wants to create decent work, and so there's minimum wages and floors. And on the other, we need to ensure that we are cost competitive with our peer nations, and that might speak to not necessarily having the best minimum wages, but at least being able to provide work for those who have the hope of none. How do you see those two resolving over the next while?
Sure. I mean, one of the challenges I have sort of identified is ideological. This so-called push towards a developmental state seems to be a bit misguided because we want to adopt sort of the Asian model of development, but that model was based on, state-led but very efficient
Mm.
development. Efficient when it comes to identifying sectors where you have comparative advantage, and efficient when it comes to the cost of development. I feel that sort of we have missed the goals when it comes to that, and we need to revisit that. The services sector offers a lot of opportunity in South Africa, but to achieve the full benefit out of our services, we're gonna have to improve the social outcomes. For instance, we're gonna have to improve the health levels, access to health, and also access to public education. Because once we can sort of produce an employable workforce of young people, we will be moving towards that level. The services sectors, particularly tourism, or let me say sectors which are highly dependent on foreign income, do require a ready labor force. And this is what those Asian economies have really been able to achieve, and really been lacking there.
Absolutely. Education is absolutely critical. I often think that we have less of an unemployment crisis than we do of a skills crisis. And if you look at how often those with the right skills, coders, for example, get snapped up by banks like Nedbank, for example. So if you've got the right skills, the jobs are there. The problem is we're just not producing those sufficient skills in sufficient quantity. I just want to move on now to monetary policy. We've been talking a little bit about fiscal policy, some of the structural constraints to growth or impediments. From a monetary policy perspective, we recently had the SARB's first meeting this year, and I found it quite interesting that the quarterly projection model showed two possible rate hikes in the second and third quarter, very small ones of 25 bips. Did you find that a surprise, considering how weak the economy is? And what do you expect interest rates to do over the course of the year?
Sure, that sort of captured our attention. In addition to the fact that the quarterly projection model is sort of bringing the rate hikes forward. At the time of the November meeting, the that QPM was predicting hikes in the third and fourth quarters of this year. But our view remains that the economy will remain just too weak to sort of justify early rate hikes, and also the inflation outlook remains subdued despite the risks that are in the pipeline. So we will remain with the view that uh, rate hikes will come only in 2022, but that will depend highly on the economic trajectory, that is the rate of recovery in growth.
Absolutely. Data dependent. And as the deputy governor has stressed in the past, they're going to be looking at that output gap between what our country should be producing and what it actually is when it takes interest rate decisions into account. And it was a close run thing, 3-2, the split when the decision was made. So there are clearly some on the MPC who still favour a cut in this environment because growth is so weak. Isaac, a great pleasure chatting to you, and we'll certainly be looking out for that budget next month, a critical time for South Africa as the fiscal cupboards are bare. Take care.
Thank you, Michael.